Hello, everyone, and welcome to our webinar on car buying and auto loans with IDB Global Federal Credit Union. We are so happy to have you here with us today. I want to go over a couple of housekeeping items first before we get started with the presentation. One is that we have a Q&A bubble at the bottom of the screen. That is where you'll place your questions if you have any throughout the presentation, and we'll leave a couple of minutes at the end to make sure that we gather those questions and try and answer as many as we can. Additionally, this webinar is being recorded, so we will send out a link with the presentation back to our website that will contain all the elements that you need in probably about a week. So make sure you look out for that email. That way you have all the content you need to make an informed auto buying and car loan decision. Additionally, one last housekeeping item is that we do a survey at the end of the webinar to make sure that we are providing you the best content, financial content available to you. So make sure you take that survey. That way we know what is important to you, our members, and we're providing you with all the information you need. I'm so happy to present Marco Paredes and Alejandra Raikoff, who will be your presenters today. They are amazing loan officers and leaders within our organization. They're going to take you through the car buying and auto loan process. That way that you have everything you need when you make that important decision to get into the automobile of your dreams. Without further ado, I'm going to pass it off to Marco, who is going to take you through the presentation. Thank you, everyone.
Good afternoon, everybody. My name is Marco Paredes. I am the Chief Lending Officer from the IDB Global Federal Credit Union, and I'm happy to be here doing a presentation for you guys about the car guide that we created for you. So in the agenda, we're gonna take the basic budgeting, buying a new car, a used car, leasing, some warranties, service and contract, and insurance. At the end, Alexander is going to be taking over financing. So let's start and roll because we have a bunch of information, a lot of information. When you are buying, can you just go next slide, please? Next, one more. Thank you. When you're buying a new car, you need to select what type of vehicle you're buying. You're buying a standard vehicle or the most expensive. You need to check the maintenance cost. So let's try to go for the low maintenance cost when you're buying a new vehicle. Also, you need to check the interest rates that are based on this type of loans. Usually when you're buying a new car, the interest rate is lower than the used car or lease. Next, please. When you're buying a used car, usually the prices are less expensive. It still will require more maintenance down the road. And the term of financing usually is shorter than the new auto loans. And the interest rates are a little higher. Next, please. Lease a car. When you're leasing a car, the monthly lease payments are generally lower than the financing payments on the same vehicle. Cars are usually new and require minimal maintenance. And also, once the lease ends, basically you don't own anything. So just turn on the car, return the car to the dealer, and that's pretty much it, depending on the type of lease that you have. Next, please. When you're doing the budgeting, basically you need two things. It's just personal needs. So if you have family or you're by yourself, you know, the size of the vehicle, that will be important there, and what you can afford, monthly payments. So those are the two things that you really need to be aware when you are buying a new car or used car. Next, please. Based on the how do you pick the car based on your needs and not wants? You are going to have three specific points: the manual and automatic that you need to select. Manual cars are less expensive and better with fuel economy, but harder to resell. Automatic cars are maybe better for driving in heavy traffic, and the economy of fuel is not that good. All-wheel drive versus front-wheel drive. All-wheel drive cars handle better in snow on that type of winter conditions. Front-wheel drive are better for fuel economy. space. Smaller cars are better for fuel economy and easier to park. And larger cars are maybe better for multiple passengers, you know, a larger family, or to carry some cargo in your vehicle. Next, please. Buying a new car, we have some points that you should be aware of. You need to know what you can afford, obviously, your monthly payments. Know what you can, what you want in advance. So if you're buying a small car, SUV, so make sure that you do your research. Go online, check the different websites that are online. It's a lot of information that you can, you know, go check online, like Edmunds.com, Kelley Blue Book, and any other sources that you know would like to check. But make sure that you compare prices, you know, warranties, all that stuff. Negotiate price. You need to negotiate the price no matter what. Just don't go with the dealer, because the dealer is gonna take, you know, all the money that they can, you know, when they are selling the vehicle. They are just focused on that particular point. If you are being, you know, buying cars in the last, you know, 2 or 3 years, these, you know, dealers are very specific on try to get your money as much as they can. Trading tips. We're gonna have some trading tips in the presentation, but still make sure that you get the most value for your old car, and negotiate price of your trading before you buy the new vehicle. Try to get, you know, the value of your vehicle now, you know, if you are planning to buy down the road in the next 2 or 3 months. And know the language. Basically, you need to know the language of what the dealer, you know, mentions when you are doing the negotiation with them. Next slide, please. So to determine how much you can afford, you need to see your current monthly living expenses to see if everything is covered, and you can add, you know, $300, $400, $500 in monthly payments for a new vehicle. Can you afford to take a new monthly payment? Yes or no? And consider your financial goals down the road. If you are planning to purchase a new home, or if you're doing some remodeling at the home, some things that you will need to consider as well when you are buying a new vehicle. Next slide, please. As I said before, you need to do your research, check publications, websites, and discuss any car features and prices. For example, newspaper, consumer reports, Edmunds.com, Kelley Blue Book. There's a lot of information outside. Before you go to a dealer, check what you are planning to buy. Compare models, prices, add-ins, in the dealer showroom, so before making the decision. They're going to try to catch you immediately if you are in the showrooms. Contact a car buying servicing to make comparisons. We have the credit union car buying service. So the only thing that you need to do is just put your information, your email address, and they will send you some certificates and give you some idea of the pre-screened or pre-negotiated prices that are in the market. So they have some alliances with some dealers that they will provide a better pricing for you. The prices are already negotiated, pre-negotiated. Next slide, please. Next one. When you are trading your old car, research the value of your old car. Go online, check, you know, with the tools that are, you know, online and the different websites like Kelley Blue Book, as I said, mentioned before, Edmunds. They give you some idea of how much can, you know, get from your car based on the miles, how you're being treated the vehicle, age of the vehicle, make a model. Negotiate the best possible price for your new car. No, so once you have the value of your vehicle that you're going to be trading in, now you start negotiating your price of the new vehicle, and discuss the possibilities of the trade-in after you negotiated the price of the new vehicle. Next slide, please. Trading your old car. Be aware of special promotions, advertising, and high trade-in allowances. Does the trade-in allowance apply to all cars? You need to make sure that applies to a new vehicle that we are buying, regardless of the condition of your old car. Will the cost of the new car go up as the trade-in allowance goes up? So you need to make sure that you negotiate that your allowances don't go up. Does the dealer have cars in stock that have no expensive options? So you need to be sure that the cars that you're buying are in stock or not. So that will, increase prices somehow. Are the special offers available if you order a car instead of buying a new one that is on the lot? Also, you need to be checking, what is available or not to compare prices if the prices are going up or not. If they are taking another vehicle from another dealer, well, that will incur in some fees when they are bringing the car to you, to the dealer. And read the fine prints, really. So basically all, those small letters, are, especially to read. Next slide, please. New car language, invoice price, manufacturer's initial charge to the dealer. General includes the freight, basically. They bring the car to you. Base price, cost of the car without options, including standard equipment and factory warranty. Monroe ticket price, MSRP. When you go to the dealer, you see always that MSRP. Label fixed to a car window that shows the base price, manufacturer's install options, which should suggest retail price, manufacturer's transportation charge, and fuel economy and mileage. And the dealer's stick price, which takes the MSRP plus the suggested retail price of the dealer installed option. So you will need to negotiate between the MSRP sticker versus the dealer sticker. So I usually try to go with the MSRP. Next slide, please. Buying a used car, you need to know what you can afford. Know what you want in advance, of course. Do your research as well. Check what is in stock on used cars, miles, to try to negotiate the price. Perform your own inspection and hire an independent mechanic to perform the inspection of the car. So if you can do that, will be the best for you because you know what you are buying. Familiarize with the terms of the buyer's guide. Usually the buyer's guide is a guide that the dealers need to provide to you with all the information of the vehicle. And you will see, if the vehicle has any problems or age, miles, or repairs that they did during the process. Next slide, please. Things to consider when you are doing the research. What are the crash testing ratings on that vehicle? I don't know if you hear before, show me the Carfax. Show me the Carfax. Really, that will give you, any kind of information if the car was crashed or not or being in an accident. So it's good to consider that is one of the things that you need, most important really, that you need to ask for, just to get the ratings on that vehicle. Show me the Carfax. What do you currently owners can say about the vehicle? So if you're buying from a direct person, just ask, what happened with the vehicle, history, if it was one buyer, two buyers, how many people own the vehicle is important. What is the annual maintenance cost? What kind of warranties is still available on the vehicle that you are buying? What is the cost of the yearly insurance as well? So usually the insurance for vehicles, used cars, is a little higher than new cars. Next slide, please. Inspection. Examine the car yourself using the inspection checklist that it can be found online. Online, you have a bunch of checklists that you can see on the points that you need to see when you're buying a used car. So just go online, find one, and if you're buying a used car, just print the list and make sure that you do all the points on the checklist. Test drive the car on the different road conditions, so go beyond and see if the vehicle respond well to the different conditions of the road. Ask for the car's maintenance record. That is super important to see if they are doing the maintenance consistently on time. Talk to the previous owner if it's possible, if they allow you to talk with the previous owner. If you're usually buying from a dealer, they usually don't allow that, but you can ask always. Have the car inspected by a mechanic you hire. If you can, just go with a mechanic. That's going to give you peace of mind of what you are buying. Next slide, please. The buyer's guide. The buyer's guide informs buyers of the important information about the car. So basically all the maintenance, crash, and how many owners the vehicle had. Becomes part of the sales contract and overrides any contrary provisions. Must reflect any negotiated changes in warranty coverage. So that is super important. Dealers who sell 6 or more cars per year are required to post in every used car they offer for sale, and they need to have the buyer's guide. So make sure that when you are buying a used car, you see the buyer's guide to get very informed of what you are buying there. Buyer used car. Next slide, please. Okay, what portion of the repair costs will the dealer pay? So you need to check if they are gonna do any repairs on the vehicle or not. What parts of and systems are covered by the warranty? So make sure that everything is, when you are buying a used car, still is on warranty, or if you can extend the warranty when you are buying the vehicle. What is the warranty length for each covered system? And if it's any kind of deductible, and if so, how much? So potentially that can increase your cost down the road. Next slide, please. When you're buying a used car from a private or non-dealer sales, the purchase usually is an as-is basis. Basically, you are getting what you're buying. So you are not going to be able to claim anything after you buy the vehicle. Basically, if it's any problem, you will need to pay for any repairs. Ask the seller if you can have a vehicle inspected by your mechanic. I think that's important when you're buying a used car from any type of sources. Use the buyer's guide list of major car systems. So you can go online and try to get a buyer's guide and compare and ask the questions basically of the buyer's guide to the private person that is selling the vehicle. So you can have an idea of the information on the vehicle that you are buying. Ask to review car's warranty or service contract. Car may be covered by manufacturer's warranty or a purchase service contract. When you're buying some dealer sales, you're gonna see the pre-owned cars. Program cars, which are low mileage, current model year vehicles returned from short-term lease or rentals, and demonstrators. There are new cars that are not being owned, leased, or used as rentals, but having driven by the dealer staff. So those are good dealer sales. Maybe you're going to be reducing the price, still getting a new vehicle with some miles, but still you have all the warranties that is for new vehicles. Next slide, please. Dealer sales. Research the value of your old car. Always, if you're gonna do a trade-in, first you need to know how much is the value of your current car. Negotiate the best price possible for your new vehicle. Discuss the possibility of your trade-in. after you have the value. Ask about the dealer return policy. What happens if you want to return the vehicle within the next, I don't know, 15 to 30 days? Get it in writing and read carefully just the return policy. Review buyer's guide, post it in the every used car. So they will have the buyer's guide no matter what. Leasing. In leasing, you don't have ownership of the vehicle. You're going to have monthly payments are usually lower than financing. You have an annual mileage limit between 12 to 15 miles. You can negotiate that with the dealer that is doing the leasing. The lease terms are usually between 2 to 4 years. At the end of the lease end, you might return the car, making the payment of the remaining costs and walk away without nothing, pretty much. The lessor bears the risk of the car's future market value. So down the road, also you have the option to buy the vehicle at the market value of future market value. And the auto insurance usually costs a little bit more in a lease. When you are doing a lease, these are 5 points that are, I think, key. Show us you are buying a new car, negotiate the lease terms. Same thing, you need to negotiate your price no matter what. Make sure that the manufacturer's warranty covers the entire lease term. So if you're buying or you're doing a lease for 4 years, make sure that the manufacturer's warranty covers the 4 years. Ask about the extra charges for excessive mileage. So if you make some traveling outside of the area, if you exceed the 15,000 miles, how much is going to be the cost for those extra miles, for wear and tear and early termination as well. Before you are signing a lease, take a copy of your contract home and review carefully from the pressure of the dealer. They want you to sign the lease immediately. That's what they're going to be selling you. So they want you to get a lease. Obtain the lease cost information from the lessor before signing the lease. So be informed, get the cost, and review the contract before you are signing that lease. Next slide, please. Language leasing, close-end lease, return the car at the end of the lease and walk away. Open-end lease, pay the difference between the value stated in your contract and the lessor's appraisal value at the end of the lease. Basically, you are buying the vehicle at the end, just with the value assessed by the lessor. Some additional lease inception fees, payments you must make when the lease starts. Capitalized cost, price of the car for leasing purposes, plus taxes and extra charges like service contract and registration fees. Capitalized cost reduction, like down payment if you are trading in a car, making sure that the dealer applies the trade-in value to the price of your lease is based on. At the beginning of the lease cost, you have the lease inception fees. The first monthly payment, refundable security deposit of or your last monthly payment, fees for licensing, registration, and title. Capitalized cost reduction is like a down payment. Acquisition or processing fee, freight or destination charges, and the state and local taxes. Monthly lease cost, you have your monthly payment. Additional taxes are not included in the payment. Sales, use, personal property tax, insurance premiums, ongoing maintenance costs, fees for the late payments, safety and emissions, inspections, and early termination charges, if applicable. If you don't buy the vehicle, you might have to pay disposition fee, charges for excess miles. Dealers may charge you 15 to 20 cents for every mile that exceeds the limit. It's just to give you an idea. You need to talk with the dealer and see, you know, really how much is going to be the cost on that. Charges for excessive wear, such as body damage and worn tires, and early termination charges for ending the lease early than expected. Negotiating points on a lease. Agreed upon the value of the vehicle. Upfront payments, just make sure that you negotiate the upfront payments. Length of the lease, you're gonna be doing a lease for 2 or 4 years. Monthly lease payments, negotiate your price or monthly payments and reduce that as much as possible. And the lease fees and charges, make sure that you ask for those end lease fees and have those in writing. Mileage allows per mile extra for charges for excess mileage. So if you exceed the 12 or 15,000 miles a year, so try to negotiate that as well at front. Option to purchase, lease end or early than that. Also, you have the gap coverage to protect in case the car is being totaled or stolen. So any dealer or bank or financial institution will offer you a gap option. Know your rights. To use the car form agreed upon the number of months of miles, basically. So you can, if you are doing at least for 4 years, is 48 months, and the 15 miles a year, 15,000 miles a year. Turn your vehicle lease end, pay then less fees, charges, and walk away. Make sure that everything is in writing and you are not have extra fees that you need to pay for that lease. To buy the car, if you have purchase option, make sure basically that that is also in the contract. And once the cost, the leases expire, just review if it makes sense really to buy that vehicle based on the value that they are providing you at that time. Sometimes maybe it's gonna be better to do our other lease or buy a new vehicle or a used vehicle. Take advantage of all the warranties, recalls, and any other services that may apply to that vehicle. Previous slide, please. I'm sorry, next slide. I apologize for that. Type of warranties. In warranties, you have as is, well, there's no warranty. Buyer is responsible for any that goes wrong with the vehicle. Implied warranties, unspoken written promises that never expire. Express written warranties, full or limited coverage can be negotiated. Implied warranties are included automatically pretty much in the contract. Unexpired manufacturer warranties. So basically that's from the vehicle, a Ford or Volvo or BMW, you know, warranties. Next slide, please. Mechanical merchantability. I think I pronounced it there. Seller promised that the car will do what it's supposed to do, applies only to the basic functions of the car. Breach, of course, only if the buyer can prove that a defect exists on the time of the sale. Fitness for a particular purpose. Buyer buys a car based on the dealer advice that is suitable for a particular use. Example, a dealer who suggests to buy a vehicle for a specific car for hauling or trailer is promising that the car will be suitable for that particular purpose. Next slide. Full warranty. Anyone who owns a car during the warranty period is entitled to a service. The service will be provided free of charge, including the cost to remove and reinstall all covered systems. You have the choice to of replacement of a full refund if the dealer cannot repair the covered system after a reasonable time. Limit warranty, if any of the statements regarding full warranties do not apply, the warranty is limited. Unexpired manufacturer warranties. Most specify the percentage of the repair cost that the dealer will pay. List of the specific parts and systems that are covered by the warranty. Includes the warranty terms for each covered system and states whether there is a deductible or not and how much is the deductible for that particular purpose. Avoiding warranty scams. If you get a mail for phone calls about renewing your warranty, do not take the information at face value. Basically, contact your dealer or contact the financial institution that is helping you with the loan to see if they have something better, really. So they take that information from the title information, and they will provide, they will send you marketing, right and left. Take your time. The most legitimate business will give you time and reading information before asking you to commit to a purchase. Never give out your personal financial information or sensitive information. Include your driver's license, number of the vehicle, unless you know who you are dealing with. Be skeptical of any solicited sales calls or if any calls are being recorded or your phone number is on the do not call register. Warranties versus service contract, both provide repairs and maintenance for a specific period. Warranties are included in the price and product. Service contract are extended warranties, cost extra, sold separately, and may be arranged at any time. They provide optional protection or specified mechanical and electrical components of the car available for purchases or supplement of any warranty coverage period for a new or used car. Service contracts. Is this a good buy or not? Does it duplicate warranty coverage or not? So you need to make sure that you are not duplicating that. If it's covered by the warranty, why buy that? Does it extend it beyond the time you expect to own the car? So if you are buying the car and your warranty covers only 36 months and you have a financing for 5 years, maybe you can extend the term to cover those 2 additional years. If it's transferable, is a shorter service contract available? Yes or no? If it's transferable, maybe you can use that as a selling point if you are selling your car down the road. Will the cost of repairs exceed the price of the contract? What parts and systems are covered on the service contract? Is a deductible required? Yes or no? Also, it shouldn't be, a deductible. If it's a deductible, think that twice. If so, how much is the amount and the term of the deductible? Are any kind of cancellation fees or transfer fees for that? Who backs the service contract and if they're reportable? No? Insurance. You have a credit insurance, which is optional. They're going to try to sell you a credit insurance that pays scheduled unpaid balances of your car loan if you die or you become disabled, pretty much. Warranty auto protection, which is the gap. Optional also as well, protection that pays the difference between the amount you owe on your vehicle and the amount you receive from your insurance company. So if your car is stolen or destroyed before you have satisfied the credit obligation, basically that should cover any type of gap between your insurance value. So usually they're gonna give you a little less, but the gap can cover that option. And that's pretty much that I have for you guys. And now we have Alexander Grekov, our loan production manager from the credit union, that will talk about a little bit about financing. Thank you, guys.
Good afternoon, everyone. I hope you're awake after that long presentation. But we're going to talk a little bit of some tips and terms, and also what is a direct lending or a dealership financing, or what's the meaning of car title loans that we don't see many often, but they are available for many of us. Please, next slide. So as already Marco mentioned, please do your research and shop before you go into the dealer, because you need to be prepared for a lengthy stay at the dealer. What they try to do is to keep you for a long time, so you get bored and then you want to sign whatever they put you in front. So be prepared of that, bring your snacks and be ready to negotiate. If you have the option to make the largest down payment, it's a pretty good deal, because you will have a lower monthly payment. Also pay for the tax, title, and registration, because usually you want to add that, which is 6%, approximately 6.5% of the purchase price. Usually you can get a lower financing for paying that outside. So the balance you should have discount that part of the portion of the payment. Negotiate the base price is what we know. And also, if you are bringing a trade-in, try to negotiate first the price of the vehicle, so you have a good deal. And then you mention to the seller, to the salesman, that you have a trade-in and you already researched that the value. So you won't be like, otherwise they will be lowering or increasing the price of one or the other to get a benefit on their side, but not on your side. Also negotiate, if you already know the price of the loan, and Marco mentioned that we have an excellent service of ABC that can give you an information of how much is the vehicle. Try to get that information beforehand, because usually you won't pay the MSRP. Try to go with a lower inventory. It's usually the invoice price plus an extra, because that's the profit of the dealer. And the salesman will try to offer you as many things as possible to increase the invoice price. So be aware of that. Also, the dealer will ask you how much you can afford, but actually, if you have been pre-qualified and you have your pre-approval with you, you will know how much will be your monthly payment. So also be aware of that. Always ask if they offer financing, if they're gonna charge you penalty for prepayments, because that happens pretty often, and they have to stay with the dealer paying a higher interest rate at the beginning, and they won't let you out of the deal. And also check off the ads that they promise a good like a good loan, even if you have bad credit, because what is going to happen if they're going to charge you a really high interest rate. We have seen clients coming over to refinance because they were at the dealer and they offered 10, 12, 20%. We have seen that. And if you see in our website, we have range for 1.25 up to 4% in fixed rates. So be aware of that offers, because it's important that you go prepared. Next slide, please. There's another more language that we're going to see here. So we already know about the APR, which is the annual percentage rate, and it's the cost of credit. The down payment is the amount that you put up front to reduce the loan amount that you're going to be financing, which is the amount you finance. That's the loan amount that you're going to sign in the loan and security agreement. The finance charge will be the interest that you're going to pay during the life of the loan. And we also, you will see a language about fixed rate financing or variable rate financing. Fixed is going to remain the same, and variable may adjust depending on the lender guidelines. So be aware of those two. In our case, we offer both of them. We offer fixed rate, we offer variable rates. We offer the same rate for new cars and for used cars, but we do a different valuation for used cars, and we request more documentation for used cars. So please be aware of that. And the assignee is the financial institution that's going to be recorded in the title. Next slide, please. Before you visiting the dealership, okay, evaluate your financial situation. You already know what you can afford, because you can do a spreadsheet and see your cash flow. And then you can see what are your fixed costs and your extra like expenses. But actually the car is going to be a fixed cost for depending on the term of the loan. It could be 5 years, 6 years, 7 years now we have. And also add the insurance, because that's going to be happening semi-annually. So you have to determine that as part of your expenses when you go along with the car. Determine the price of the range of the car that you're buying. So put a maximum, like, okay, even though I like this car and it has all these additional features, that's the maximum that I can go to, because otherwise they will try to show you the more expensive cars, and that's what the dealer takes forever to sell because they're more expensive. Understand the value of the cost of optional credit insurance. They will try to sell you credit life insurance or disability insurance. That's payment along with your principal and interest payments. So if you don't need it, don't buy it. But if you are, we call it in our countries in Latin America, the gravamen. But if you don't want it, just reject that at front, because cars tend to depreciate over the years. It's not an asset that raise in value. So you have to evaluate that part too, and compare the annual percentage rate and financial terms for multiple financial sources, meaning shop around. And your credit is going to be very important to get a good rate. Usually many financial institutions do credit scoring, so they will see what is your score. But if you apply to many places, they're going to generate inquiries and that will lower your score. So be aware that you can go one or two, because you can check their rates on the website. So you don't need to apply directly, but the ones that you're more interested, go for it, get your pre-approval, and then you can go to the dealer and be since you already be pre-qualified, you can see if there's something that is more interesting there, or you go with your pre-approval. Next slide. Now, step-by-step financing, guys, stick to what you can afford. We already mentioned that, and negotiate your finance arrangements and terms, because you already have your pre-approval and you will go and just go decided to just negotiate the final price of the vehicle and read the contract carefully. So before you sign, always read what they're putting on every line of the bill of sale or purchase order, because you may see, oh, there's an, I heard lately from many clients that there are a new fee, they call it like COVID fee or something like that, but that doesn't go to the state, doesn't go to anyone, it goes directly to the dealer. And this is like an extra fee that they are hiding because of the pandemic. So please be aware of that. So read every line carefully. Next slide, please. Now, after completing your car purchase or lease, be aware that your finance a vehicle. Therefore, there's going to be a link in the title of the car that is going to, and this title is going to stay with the financial institution that is financing the car until you pay off the contract. So if in 5 years you pay off that vehicle, the financial institution will release the lien in that title and will return the original title back to you. So try to make your payments on time. Don't miss any payment, because you will recurring late fees if that happens. And also after 30 days, it's going to be reflected on your in your credit report. Usually in the report, you will see an I-1, which is an installment loan paid every 30 days. That's an I-1. But if you see an I-2, it's because you didn't pay for 2 months, you're 60 days behind, and your credit score will go down. And that will help you if you want to, if your credit score go down, it won't allow you to qualify for better deals if someone is doing credit score rating. Next slide, please. Now, paying cash. Okay. If you are buying a small vehicle, sometimes it's important to pay cash. We offer what we call a share secure loan. So you can, instead of, you can use your own savings account as collateral for the loan, and the rate is very low, it's 1.65, and it's 1 to 10 years. So you have the option not to buy the car with an auto loan, you can do with a share secure loan with us. So think about that, and try to sell before the loan expiration. So the amount that you receive from the sale, you can put it towards the payment of the loan. We don't have penalty for prepayment, so you can prepay your loan with us anytime. And if the car is repossessed or total, it may, if you don't have gap insurance, you will have to pay the remainder of whatever is the payoff of the vehicle. Let's say it's $5,000, but that's the payoff, but the insurance company only give you a check for 4,000, so you will have to cover that 1,000. That it can be covered by gap insurance, or you will have to cover that with your savings. Next slide, please. Obtaining credit. Okay, so increase total cost of car because of the interest rate and loan costs. So consider a down payment. It's an option to lower your monthly payment. Extend the term of the loan so you can have a low monthly payment but a higher interest rate during the life of the loan. So you can do those calculations and online. And as it says here, the rates are usually higher for loan terms that are for vehicles that are used than for new cars, because and even the insurance sometimes is the same thing, because new vehicles have more features that are secure for the, like cameras that let you know if someone is too close, or the ABS, which is a braking system if you brake immediately. Those are features that the insurance company consider it to lower your insurance premium. And also it happened with the lender. The more features is the more secure is the vehicle, so you can avoid collisions. So usually the new loans for new cars are between 3 to 7 years, and for used car up to 5 years. In our case, we have up to 6 years financing in used or new. And you also check the fine prints about first-time buyers, because or bad credit, because first-time buyers sometimes don't have much credit. In our case, we do loans for those who just arrived to the US, have driver license, and have a social. We don't do credit scoring, so please contact us. And if they have bad credit, we will check that everything is up to date, and we can see case by case the application online. Next. Factors that influence your APR. Usually your APR is affected by your credit score, your credit history, how your finance, the current finance rate that the market is offering, and that's the competition, the market conditions. Usually the dealer, you can see that one Toyota is here and the Nissan is in front and Honda is in the next corner. So they will try to compete and they will try to get the best rates. So look for that, look for special offers too. Next. Financing and know the following. So you already know the price of your vehicle. You will go and negotiate that. Also verify the amount you're financing after down payment. Then you will see the finance charge on your loan and security agreement. You're going to see the APR, which is the annual percentage rate in the loan and security agreement too, and the number of payments. This is going to be like, this is an extra where you're going to see on your bill of sale and in your loan and security agreement terms with the lender. So you will see that the total of payments, the amount that you finance, the interest charge, and that will give you the total cost of the transaction. Next slide, please. Financing and direct lending. So usually the buyer obtains a loan through a finance company. It could be a bank, it could be a credit union, it could be directly from the dealer that usually have negotiations with direct lenders. And you will agree to pay an amount of finance over a period of time. Usually if you go with a pre-approval from us and you leave that with the financing guy, you will have up to 5 days. You will sign a note that you will have up to 5 days to return with a check to them or with a wire transfer. Because of COVID, some people don't want to, but you can take the car with you and you can wire the funds or leave a check to them, proceed from the loan. Next slide. Buyer obtains a loan through a dealership. Yeah, that's pretty often, and agree to pay an amount financing with a period of time. That's when you do the agreement directly with the dealers. Dealer has, as I mentioned to you, some assignments and contracts with some banks. And you sometimes, or most of the cases, the dealerships, the dealer sells the loan to a third party, and they will take care of the services and collect the payments. Next slide. Now, what is convenient to do the financing with the dealer? Well, it's convenient because they may offer buyers a range of financing options. We do offer a lot of financing options too for many range of brackets of if you put 20% down, or you put finance 100%, or including taxes too. And they wanna offer special programs with some manufacturer sponsor and low rates. Now, the negative side will be that the dealer might try to make an extra profit, because in the loan process, they will try to get a profit out of it, and they may pick the lender that is more profitable for them, not for you. So they won't check that they're offering you the best rate either. They will try to assign you a rate depending on the term, and sometimes the monthly payment is gonna be really high. So check carefully what are the monthly payments and how much is going to be the interest. If you can see the amortization schedule, will be amazing, because then you will see how much you're paying. And also the lender might pay to the dealership to refer customers. So because they have a deal that as long as you refer me one client, I will pay you a fee. So they will try to push you over to negotiate with them. Next slide. Dealers sometimes offer low rates for a specific car, is true, and usually are the cars that are most expensive, or they have more inventory on the dealer. So they don't offer you. They may advertise a lower rate, but when you go to them, they will say, "Oh, this is for a specific models, or this is for this specific car," and you will see the tag price and it's like high. So in those cases, if you want to lower the monthly payment, you will have to put a higher down payment, or if usually you agree to a lower term, which is 3 years, and the monthly payment is going to be really high. It's going to be like 800, 900. So you have to see if you can afford that. They will also check that you have an excellent credit history. So it will be like 720 points or higher. So usually you don't know that until they run your credit and they let you know we can offer you this. So by then they are inquiring and they lower your score. Pay a participation fee. Sometimes they say, okay, we can offer you 1.99 APR, but you may have to pay like a deposit fee or like an upfront fee to get the benefit of that lower rate. Next slide. Federal laws that regulate dealer financing and leasing are the Truth in Lending Act, the Consumer Leasing Act, Credit Practice Rule, Equal Credit Opportunity Act, and the Fair Credit Reporting Act. Next slide. So be aware of car title loans. These are the short-term loans that they give you. It's an easy way to get money upfront for an emergency, but then as a collateral, you will have to leave your title with them and sign them or assign them. Instead of the APR, the lender may charge you a really high interest rate, or you will provide the title of your vehicle to them, so they're gonna keep it in custody. And if you don't pay the loan on time or you go behind on payments, they can repossess your car. The lender may renegotiate and allow you to pay only the interest of the loan, which for many may seem like, okay, that's cool because it's going to be a very low monthly payment, but the principal is going to stay there. So the interest will accrue at the end and along with the capital. So be aware of that too. Next slide. A creditor can seize your car as soon as you default on your loan or lease. That is true. Usually after 90 days that the client go behind payments, they're gonna start calling you for collection. If you do not respond, they can repossess your vehicle. The creditor can come onto your property, and to do so, but they cannot commit a breach of peace, meaning that they cannot use physical force or threats of force or removing your car from a closed garage without your permission. If the creditor agreed to change the payment date, the terms of your original contract may no longer apply. So get any changes on your loan in writing, or if you want to lower your monthly payment because it's too high, come to us to refinance, and then you will have a lower rate, a lower monthly payment, and that may fit your expenses. Next slide. Once the car has been repossessed, the creditor may either keep it as a compensation for the debt and resell it to pay off the balance due on the loan. You may be entitled to redeem or buy back your car if you're paying the full amount you owe, plus expenses connected with the repossession. Yeah, because the lender will incur in contacting a company who do the repossession or legal fees too. You may try to buy back the car by bidding on it at the repossession sale. And the resale of a repossessed car must be conducted in a commercial and reasonable manner for an amount not below of the market value, because the car is used and there's going to be evaluation over the car that should be covering the balance and any other expenses on the transaction for repossession. Next slide. Any difference between what you owe and on your contract and when your creditor gets for reselling the car is called a deficiency, and your creditor may sue you for deficiency judgment to collect the remaining amount owed. So be aware of that, and it's part of the promissory note that you can read. Your creditor must pay you if there's a surplus funds. Let's say that the sales goes for a higher amount that what you owe, so the lender is entitled to return you back the difference after that the obligation is covered. Next slide. Now we offer in our website, if you go to idbcreditunion.org, you will see that we offer credit monitoring, so you can see how is your credit score behaving. There's also tools to improve your credit score. Please contact us if you have any question. Our lending department, we have loan operation specialists and loan officer to assist you at any time. If you want to do some kind of changes on your score, like, oh, it's too low, why it's too low, contact us, please. We're going to assist you with any information you may need, and use this amazing tool for credit monitoring. Next slide. Now we are offering, as I mentioned before, up to 6-year financing for used car and new cars. Please take advantage of this new finance term, because the rate is really great. And if you can see on our website, you just go there on the left side, you will see already a member, apply online here. Do it so we will contact you to do the loan immediately. Next slide. And thank you for your time. Hope you are awake.
Ale, thank you so much for all that great information. And Marco también, thank you for everything. There was a lot of great stuff, and that will help our members immensely as they go on their car buying journey. Everyone, I see that Marco's actually answering some Q&As, so I'm sure he'll get to those ASAP. I know we're getting to the top of the hour. Just a reminder, there will be a survey sent out, so please make sure you fill it in. That will help us make sure that we have all the information we need to get you the best content. And additionally, I did remind you at the top, but also right near, I'll let you know that this presentation has been recorded. We will send you the PowerPoint, as well as a recording probably next week to anybody who registered. So happy car buying, everybody. We wish you all the best, and please make sure you reach out to Ale or Marco for any of your loan needs, whether it's for an automobile or for a mortgage, credit card, etc., personal loan. We're here for you. Thank you, everybody, for joining us. Bye-bye.